Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 30th of September. Starting off with the FTSE 100, which hasn't had a great start today. We've still failed to break that 83.60 line there from May. And we've got support at around now 82.50, which is the 50-day line on the floor of that rising trend channel from this time last year. RSI looking slightly iffy in the sense that we failed at that resistance line there from the end of July. And we have a risk that, or the risk that if we have an RSI back below 47, we could have a breakdown below 82.50 and then down towards 81.65, which was the early support of this month. But still very much a case of waiting to see whether 83.60 will break on an end-of-day close basis or 82.50, and it is about even Stevens. Moving on to the DAX, and here had a great end to last week, and hoping that obviously that will continue. Paused for breath at 19,500, and looking for still the top of that rising trend channel from this time last year, 20,100, as a target by the end of October. Ideally, we stay on the right side of 19,000, basically the previous resistance from May to early September. Moving along to the Dow, which we looked at yesterday, but we always look at again on the Monday. Here you can see that recent support around 41,800. Above that, we're looking for hopefully a quick journey towards the top of that rising trend channel from this time last year, as high as 43,100 over the course of maybe early October at this stage, although this time of year not famous for big rallies, but at least on the downside, not expecting anything lower than 41,500. The old August-September peak and mid-September support zone. Moving on to Bitcoin, which is rather more difficult at the moment in terms of its trajectory. Here you can see that we failed to break that 67,700 line there from back in March, and we're back near the 200-day line, 64,000. Below that, there's the risk of a move down to the 50-day moving average now at 60,500, which I suppose would be the most obvious place for this market to go if it can't hold the top of that gap there from the middle of September, around 62,300, but still basically within that falling trend channel that we've had since the spring. Moving on to gold, and here it was slightly flat end to the week, with Thursday being the best day through the 2,700 level, and back now within that rising trend channel from December. 2,700 normally the top of that channel, so below that we have the risk of a move down to 2620, which was the early September resistance for this market. Moving on to the stocks, and not that many given where we are in terms of the FTSE. We've got Altyn rising like a homesick angel at the moment. We had the previous target there around £2.35. Above that, we're now looking for the top of that rising trend channel from March, as high as £3.30 by the end of October. Punchy call, but it's a punchy chart there with the unfilled gap to the upside through £2 in the middle of this month. Onto the amusingly named Bango, which has gapped off the low, which is normally significant, and also the floor of that rising trend channel from March. We're hoping that it will at least get back up to recent resistance around £1.25. Best case is up to £1.55, I suppose, half filling that big gap down that we had at the beginning of the year. But I suppose, given the massive gap down at the beginning of the year, we have to be rather cautious and probably at least assuming that £1.25 is the initial target there and not much more. But gap off the low, always significant. Bear trap gap reversal, normally a successful signal. On to Ceres Power, which I covered yesterday. It's up a whopping 5% after that. It's already had a massive move on Friday. Top of the channel there at 308 at the moment. We're looking for that by the end of October, which gives it a bit of time, and hoping for that while we remain above the £2.40 to £2.50 area. Next up is GreenRoc, which had an update today, and here starting to turn around within that broadening triangle base. What's interesting here is that the 50-day line is now pushing up, and that tends to be a decent signal in terms of recovery. Initial target there, £1.85, I wish it was £1.85, and then after that, maybe as high as 2.8 pence by the end of next month. But it is early days yet, and one shouldn't probably get too excited too soon even though we have a rising trend channel base on that situation. Upside value while we hold above the 1.25 pence level at the moment. Moving on to one of the stars of the show in the recent past, Global Petroleum, and here we've hit the second target there at 0.21. Above that, looking for a final near-term destination as high as 0.28 by the end of October. A lot of people getting excited about that and take the credit, but I think the charting signal was here first around the 0.1 pence area in the middle of the month, as well as the golden cross buy signal. On to Itim, which we're revisiting after the recent rally. Here we had an unfilled gap to the upside after a gap to the upside back in July. It looks as though this is a very strong but illiquid situation, looking for 60 pence over the near term, hopefully over the next week or so. If you're a fan of the shares and looking for greater glory, then the next destination could be the upper parallel of that rising trend channel base, as high as 90 pence, but that may be one for November time or the end of the year rather than any time soon. Moving along to the situation at SRT, which seems to be in a rising trend channel there from, well, apart from the bear trap that we had for May and June, back in that channel there at 26 pence to the floor and looking for 45 pence by the end of next month as a best case scenario target on that situation. Moving along to Serinus, which is back with a bang as well, and that is exciting, I think, given that we've seen the shares sort of in the doghouse for quite some time. Here we've broken out of that falling trend channel. We've got rising 50 and 200-day lines. We've gapped up as well, which we did on Friday, and that suggests that the near-term target here could be the top of that broadening triangle from the autumn of last year, as high as 4.8 pence by the end of next month, and maybe even sooner, given the sharp pace that we have there. It was basically a gap down there, bear trap, gap reversal, and then the gap high for the shares. Moving along to Tower Resources, which I think I covered very recently. I'm not quite sure exactly when. Maybe I have to look that up. But the initial target here, 0.21, has been blown out of the water, 0.021, and above that, looking for 0.030 by the end of next month or even sooner. So a charting win there, another charting win there for Tower, and you can see the RSI also helped the cause there in terms of the uptrend line there. On to the bears' favourite, which I suppose every day that the company remains on the stock market is an irritant to them. And we can see that Tern trying to break out of this falling wedge that it's been in place, which has been in place since basically the spring. What we'd like to see is an end-of-day close back above the last gap there at 1.3 pence, basically where we are now, above 1.3. Looking for that red resistance line from June, maybe up to 2 pence is the best-case scenario, although has to be admitted Tern has not really been big on delivering best-case scenarios. In fact, normally quite the opposite. We do have bullish divergence of the lower lows for the latter part of September, but the RSI remaining firm. So this, on that basis, if this wasn't Tern, you would be looking for 2 pence on a break of 1.3 pence. On to Upland, where there's been apparently some more stake building. And here you can see the shares trying to break through the 50-day moving average. They haven't been above the 50-day line since back in July. If we can do that, then the next level up would basically be the area of the old resistance line there now, the old support line there now, resistance, and that peak there that we had at the end of July, around 1.7 pence by the end of next month. But we need to get that end-of-day close above the 50-day moving average at 1.2 pence. Obviously, we don't want to see the shares back below 1.1 pence recent support. Finishing off with Xtract, and here looks like we've got a little bit of a rebound after what has been an incessant bear run. Here, bouncing off a support line there from last November around the 0.55 level above that. Looking for the shares to get back to 0.8 to 0.9, basically back towards the 200-day moving average, just above 0.9 pence. That's it for me today. More updates tomorrow.